traders, welcome to the TMT special edition video on crude oil. And again, just real quick, $14.95 bi-weekly videos on crude and then gold. It's a no-brainer, guys, for the amount of money that you not only would you save getting to the right trend, but the money that you make on these videos are bar none. You probably pay 5 years worth of the cost of these videos. $14.95. Check it out. Go out to the website tradingmarkettechnicals.com and have a look. Any questions or comments, you could always send an email out to support. All right, so anyway, let's get right back to it. Earlier in the month, on the video in the beginning of the month, we mentioned that crude oil had a little bit of legs left to go. There was a big bearish rising wedge creating 5 waves. We need 5 waves in any wedge pattern. And the 4th wave is yet to be completed, but I do think that we're coming into an inflection point now, even more so that we have a Fed policy change. We have an interest rate rising environment. As of Friday, it did not happen. Obviously, crude oil rallied and rallied again on Monday from the lows. We do have an OPEC meeting coming out on Thursday. I don't think there's going to be a change. With crude oil back at 50, around 50, I think that you're going to need some real exceptional news to push this even higher. Does it go to 51, 52? It's possible. But I'm looking for now a reversal back to somewhere around maybe 40, 41, $42. I don't think crude will go and test the lows. Now that we have supply that's being reduced on a monthly basis, we did come into a peak build in inventory season right around April, May, and June, where now we see that crude oil inventories have been having a draw the last couple of sessions. We'll come this week to see what the inventories are going to be. But again, let's talk technicals now. Going into the commitment of trader reports, it's not a timing tool, but you could see here that they're still heavily short the commercials. These are the guys that take the oil out of the ground and hedge their bets, where you could see here that the speculators, which are the dumb money supposedly, they do follow the trend though. So if you can pick a trough or some sort of a valley here like we got here, and you could follow these guys as they start to go up. It's highly profitable as well. But when you get to a move, a big move that we've had, and now you're at these areas here, you could see here if you go into the commercials, you know, they're only bullish 38%, where the speculators are bullish 75%. Okay, and they did reduce their longs, their short by a margin, but still heavily short crude oil. Looking for a pullback in crude, so I'm looking for a sell signal in crude oil. So if you are long, you might want to definitely tighten up your stops. Okay, so now let's take a look at the dollar, right? Because if you're looking at crude oil or any commodity, you want to look and see what the dollar's doing. The dollar has definitely room up to the 95.83 area. So with an interest rate rising environment, the dollar does very well. Commodities does not. And aside from the gold picture, you know, you can call that as a safety trade, a safe haven trade, parking your money in extreme volatility. Well, if this market does sell off, crude oil will be one of the culprits to sell off, and crude oil stocks as well. So just keep that in mind. And we are at an inflection point in U.S. equities as well, where now we're testing 2100, testing the highs. We had a 4-day rip going into the holiday week. So let's see if the market reverts back to where it was, starting to head back lower again. So again, that's another video, but just wanted to show you what the dollar's doing. Okay, let's take a look at the bullish percent energy sector. This is based on a point and figure chart, and you can see still highly elevated. And when you get to these areas up in these zones, you look for a sell signal. Okay, and this is what we're having here. You could see that we are making a lower high from this previous high, a lower low and a lower high. Okay, so that's not a good sign as well. Yeah, we bottomed a little bit, but we bounced off this area. So again, bullish percent energy still on a sell signal, as well as the COT report from the commercial traders. Again, you take that, and then you take a look at now some of the charts and where you are into the monthly chart. Now, this is a monthly chart. 49.56 is the 20-month moving average. Okay, 49.56. We're trading right around there right now where we closed on Friday. That's going to give you some sort of resistance. Take this area right up in here. All right, and this is the volume bands. You could see that we're going to come into a big area of resistance as well, and that's something that you got to be cautious about if you're long, or look for some shorting opportunities if you want to get short the market. All right, and then let me show you why. Let me get this out here, guys. Sorry about that. Charts didn't want to work for me. All right, and anyway, daily chart. Here's WTI. Here's the crude oil chart, and you can see here we have a beautiful big bearish rising wedge, and is only bearish if it breaks the wedge. So it's going to need some work still. I would not want you to short crude oil at the moment, but what's happening here? Starting to roll over. You could see we're starting to go to the downside. Now we still need a little bit more work. That'll give us some negative divergence off the bearish rising wedge, and then again having you need 5 waves. This is the third. This is going to be the fourth wave. 1, 2, 3, 4, and then the fifth wave lower, and that would be the break lower. Okay, where does it go? Well, if you take a look at and let me just show you the crude oil contract, and you can see we have the same area here. This is the same setup. And you can see a little more clearly here that we actually have MACD starting to roll over and a big overbought state in the RSI. And again, into that wedge. So we can get back up maybe to 50, 30, even 51 and overshoot. I think that should put a top on it. You can see that we're coming into some area of resistance. And we rallied pretty hard, guys, coming off of that, not even just a March low, but we had, excuse me, the February low, but the March low, April low that we had. Coming off of that rise, only had a very few couple of days pullback, which really didn't give us much. So again, I would not be looking to be a buyer in crude oil at all. For me personally, I'm looking to get some shorting opportunities. But you could see also why we're coming into a big band of resistance as well. Okay. Next, let's look at some other charts related to crude oil. Let's look at the WTI, UWTI, which would be the triple. You could see kind of pretty much the same here. Nice big bearish rising wedge, and you could see that coming off of the lows just alone from $15 to $37. I mean, it's just more than doubled in less than 2 months. So, you know, something that to me personally, I would be looking to either tighten up stops or looking for a sell trigger in crude oil. Okay, in the WTI. All right, here's XOP, oil and gas. And this here has more of an M top formation, which is still a bearish pattern. You can see it's pretty identifiable here. You can see that low. There's that, and that's to the downside. And again, we need to break 32-ish for that pattern to really work. I do like the fact that we have a lower high from this. This is what creates the M top formation, and then we look for lower prices. But again, we're still working on that right side, that right part of that M over here. So once that goes, we should look for selling opportunities in the XOP as well. Okay. So I hope that helps, guys. Keep an eye on these bi-weekly videos. Again, we get really extensive as far as levels are concerned. It's a no-brainer for $14.95. Have a great day, and good trading to you guys.